I'm Jim Jubak, and welcome to this week's Quick Pick video. NiSource, or NiSource, or NiSource. I'm not sure how you pronounce it. It's N-I-S-O-U-R-C-E. Ticker is simple, N-I. It's a utility. Major service areas, Indiana and Ohio. Okay, in my last trend of the week, I talked about how we've seen utility stocks plunge and how I think that that's a buying opportunity. And if you look at the chart for NiSource, one of my favorite utilities, you can see that plunge right here. Now, I think that you have a choice in looking at utilities between companies that have already made the transition to being largely oriented around renewables and made that where investors have made that transition in their minds. So for NiSource, you notice that and one way to look at this is to look at what the dividends are, because the dividends are and the valuations. So Morningstar says NiSource is about 6% overvalued, trading at 6% premium. Dividends about 3.28. They're a company where I think investors' minds have recognized the utilities transition. This is NextEra, which still has a big regulated utility business down in Florida, but you notice that, again, it's come back a lot. This is now, according to Morningstar, fair valued, and we're looking at a 3.65. We're looking at a 2.08 dividend. So those are utilities where I think investors have come to realize that they've made the transition. NiSource, on the other hand, is still a utility in a much earlier stage of that transition. So therefore, it's trading at what Morningstar calls a 20% discount. It's paying a 3.65% dividend, which is higher than those two that I showed you. Remember, this is Ohio and Indiana. You've still got a lot of coal going on here. And a lot of their earnings come from natural gas distribution. So they said that they're going to replace all their coal-fired plants by 2028. They are making investments into renewables. If you go back to that trend of the week, looking at electrification and charging, you may not think of Ohio and Indiana as being a cutting-edge economies, but in terms of transportation of goods and infrastructure, everything going from coast to coast has to go through those states. So you're looking at a lot of increased demand for electricity, for charging electric vehicles, even if those states themselves are not sort of bastions of activity in that area. So this is stock that I would think about adding to my dividend portfolio. I am going to do that. Their company last time came out and said, hey, we're still looking at about 6 to 8% earnings growth over the next 10 years or so. And as I said, the company's gradually moving out of gas utilities. They've sold off one of their operations in New England, putting some of that money into renewables, and looking like going to put about $2 billion into renewables in Indiana to replace those coal plants. I think all those things mean that the stock will get recognized by investors as a company that has made the transition away from coal toward renewables, and that where demand is going to grow because of the way the electric economy is going to shape itself. So thanks for watching. If you like this video, please give it a thumbs up. You can go to my YouTube channel and subscribe, and that'll give you a notification of when we do the next ones. We're doing about 3 a week, not always on the same day. If you want more of my stuff, including the dividend portfolio, you can go to my free site. That's jubakpicks.com. If you want that portfolio plus 5 more, total of 6, you can go to my paid site, and we've got some ETFs and options and inverse ETFs on that site, good for a bear market, and that's jubakam.com. You find all those links down below. Thanks for watching.